The check you've been counting on just changed. And if you're living on Social Security, what happens in the next few weeks could make or break your budget for the entire year. Right now, millions of Americans receiving SSI, SSDI, and VA benefits are about to see a shift in their monthly payments. And the numbers coming out of Washington tell a story that most news outlets aren't explaining clearly. Here's what's really happening. The cost of living adjustment for 2025 has been finalized, and while some folks will see an increase in their deposits, others are discovering that rising Medicare premiums are eating into those gains faster than expected. The Social Security Administration has released the official figures, and when you break down exactly how this affects supplemental security income recipients versus Social Security disability insurance beneficiaries, the difference is significant. Veterans receiving VA compensation are facing their own set of changes that interact with these adjustments in ways that could impact your total household income. We're going to walk through the real numbers, show you exactly what to expect in your December payment, and cover 3 critical mistakes people are making right now that could cost them hundreds of dollars. Let me start by telling you something that might surprise you. The 2.5% COLA increase that was announced for 2025 is actually one of the smallest adjustments we've seen in the past few years, and that's creating a real problem for people who thought their benefits would keep pace with what they're actually spending at the grocery store and the pharmacy. The Social Security Administration calculates this adjustment based on something called the Consumer Price Index for urban wage earners. And while that sounds official and scientific, the reality is that this index doesn't always reflect what retirees are actually buying. Think about it for a moment. The formula weighs things like electronics and new cars pretty heavily, but how often are you buying a new laptop compared to how often you're refilling prescriptions or paying for doctor visits? The math just doesn't line up with real life. Now, when we talk about how this COLA actually hits your bank account, we need to separate the different programs because they don't all work the same way. If you're receiving regular Social Security retirement benefits, you're going to see that 2.5% applied to your current monthly amount. So let's say you're getting $1,800 a month right now. With this adjustment, you'd be looking at an additional $45, bringing you to $1,845. That might sound decent until we start talking about what's happening with Medicare Part B premiums, and this is where things get frustrating for a lot of people. The standard Part B premium is going up to $185 per month in 2025, which is about a $10 increase from what you're paying now. For some folks, that $10 increase is going to eat up nearly a quarter of their COLA bump right off the top, and you haven't even walked into a grocery store yet. The situation gets even more complicated when we look at supplemental security income, because SSI operates under completely different rules than regular Social Security. The maximum federal SSI payment for an individual is jumping to $967 in January 2025, and for couples, it's going to $1,450. Now, if you're receiving SSI, you might be thinking that sounds like good news, but here's what they don't always explain clearly. SSI is a needs-based program, which means the Social Security Administration is constantly looking at your other income and resources. If you have any other money coming in, even small amounts, it can reduce your SSI payment dollar for dollar in many cases. This is why some people find out that getting a tiny cost of living increase in their SSI actually pushes them over the income threshold for other assistance programs like SNAP benefits or Medicaid, and they end up worse off overall. It's like getting a raise that kicks you out of programs that were worth more than the raise itself. For those of you receiving Social Security disability insurance, the COLA works similarly to retirement benefits, but there are specific things you need to understand about how disability payments interact with other income sources. SSDI recipients are getting that same 2.5% increase. But if you're also working under the substantial gainful activity limits, you need to watch those thresholds carefully because they adjust every year, too. In 2025, the SGA limit is going up to $1,620 per month for non-blind individuals, and for those who are statutorily blind, it's jumping to $2,700. If you're doing trial work period months, each month now counts at a threshold of $1,050. These numbers matter enormously because going over these limits, even by a few dollars, can trigger a review of your disability status. And nobody wants to deal with that kind of scrutiny when you're just trying to supplement your benefits with a little part-time work. Let's talk about the Medicare situation in more detail because this is where a lot of people feel like they're getting squeezed from both sides. Yes, you're getting a COLA increase on your Social Security check, but Medicare premiums are deducted automatically before you even see that money hit your account. Beyond the standard Part B premium increase, if you're in a higher income bracket, you might be paying IRMAA surcharges, which are income-related monthly adjustment amounts. These surcharges kick in if your modified adjusted gross income from 2 years ago was above certain thresholds. For 2025, they're looking at your 2023 tax return. If you were single and made more than $103,000 that year, or married filing jointly with income above $206,000, you're paying extra. The surcharges range from an additional $69 per month all the way up to an extra $419 depending on your income level. And here's the kicker. Those income thresholds barely move from year to year, but regular COLA increases can gradually push you into higher IRMAA brackets over time. You might find yourself paying IRMAA surcharges on income that wouldn't have triggered them a few years ago, simply because the thresholds haven't kept pace with inflation. Now, when we turn our attention to veterans' benefits, we're dealing with an entirely separate system that runs through the Department of Veterans Affairs, but it intersects with Social Security in ways that create confusion for a lot of people. VA disability compensation is also getting a cost of living adjustment for 2025, and the VA typically announces their COLA percentage around the same time as Social Security, though the exact percentage can differ slightly. What catches people off guard is understanding how VA compensation interacts with Social Security benefits. The good news is that VA disability compensation is not considered earned income, so it doesn't reduce your Social Security benefits. You can receive both simultaneously without one affecting the other. However, if you're receiving VA pension rather than VA compensation, that's a different story entirely. VA pension is needs-based. Similar to SSI, and other income, including Social Security, can reduce your VA pension amount. This is one of those areas where the terminology matters enormously, and mixing up compensation with pension can lead to some really incorrect assumptions about what you're entitled to receive. Veterans who are receiving both SSDI and VA compensation need to understand something critical about how disability determinations work across these two systems. The VA might rate your disability at 70% or 100%, but that rating doesn't automatically qualify you for SSDI. Social Security uses a completely different standard for determining disability. The VA looks at how your condition affects your ability to work in your specific military occupation and rates disabilities on a percentage scale. Social Security, on the other hand, uses an all-or-nothing approach where you're either disabled and unable to perform substantial gainful activity, or you're not disabled at all. You could have a 100% VA disability rating and still be denied SSDI, or you could have a 30% VA rating and qualify for SSDI. They're just measuring different things, and trying to use one to prove the other doesn't work the way most people think it should. Another thing that's really important to understand about these COLA adjustments is the timing of when you'll actually see the changes in your account. For most Social Security recipients, the new payment amounts start with benefits payable in January 2025, but the actual date you receive that payment depends on your specific payment schedule. If you've been receiving benefits since before May 1997, or if you're receiving SSI, you typically get paid on the 3rd of the month. Everyone else gets paid based on their birth date. If you were born between the 1st and 10th of the month, you get paid on the 2nd Wednesday. between the 11th and 20th, you get paid on the third Wednesday, and between the 21st and 31st, you get paid on the fourth Wednesday. For January 2025 specifically, that means some people won't see their increased payment until late in the month, and if you're not aware of this schedule, you might think something went wrong with your payment. SSI recipients actually have a slightly different timeline that confuses people every single year. SSI payments are always made on the first of the month, but if the first falls on a weekend or holiday, the payment comes early. This means your January 2025 SSI payment with the new higher amount will actually arrive in December 2024. Yes, you read that right. The payment dated for January 1st will show up around the end of December because January 1st is a federal holiday. This early payment throws off budgeting for a lot of folks because you get what feels like an extra check in December, but then you have to make it stretch further into January. It's not actually extra money, it's just early money. But that distinction gets lost, and people sometimes overspend in December thinking they're ahead when they're really not. The interaction between all these programs becomes even more complicated when we start talking about state supplements and other assistance programs. Many states add their own money on top of federal SSI payments, and these state supplements have their own eligibility rules and their own COLA calculations that might not match the federal increase. Some states tie their supplement amounts to the federal SSI payment, so when the federal amount goes up, the state supplement automatically adjusts. Other states set their supplement amounts independently, which means you might see your federal SSI go up while your state supplement stays flat. And then there are states that have no supplement program at all. If you're receiving SSI in California versus SSI in Mississippi, your total monthly payment can differ by hundreds of dollars, even though the federal portion is the same. This is why you can't always trust advice from someone in another state about what your benefits should look like, because they might be operating under completely different rules based on where they live. One of the biggest mistakes people make during these COLA adjustment periods is not reviewing their entire benefit picture holistically. You might focus on the fact that your Social Security check is going up by $40 or $50, but you're not thinking about the fact that your Part D prescription drug plan premium probably increased for the new year, or that your supplemental insurance premium went up, or that your property taxes got reassessed. All of these things eat into that COLA before you have any extra money to spend on actual living expenses. The COLA is supposed to help you maintain your purchasing power, but when every other cost in your life is also increasing, and many of them are increasing faster than 2.5%, you end up falling further behind even though your nominal benefit amount went up. This is the trap that fixed-income seniors find themselves in year after year, and it's why so many people report that they feel like they're barely keeping their head above water despite getting these annual adjustments. For people who are still working while receiving benefits, either retirement benefits or SSDI under the work incentive programs, you need to understand how the earnings test limits are changing because this affects how much of your benefit you can keep. If you're under full retirement age for the entire year of 2025, Social Security will deduct $1 in benefits for every $2 you earn above $23,400. That annual limit breaks down to about $1,950 per month. If you reach your full retirement age during 2025, there's a different limit that applies only to the months before you reach that age, and it's much higher at $62,160 for the year. Once you're at full retirement age, the earnings test disappears completely, and you can earn as much as you want without any reduction in benefits. These limits go up slightly most years, but they don't always keep pace with wage growth in the overall economy, which means more people bump up against them as time goes on.